Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, July 13th, 2021. We're going to start out with the update on the broad markets, and I'm going to share touch on a chart that I've covered many times over the years in the past, but not recently, and that is my low volume indicator, which is now firing a signal on SPY, the S&P 500. And so we'll look at that and a couple other things. I want to go over the financials. We had a couple. We had the biggest one reporting today. That was J.P. Morgan Chase, and we have the rest of them coming all this week, other than Berkshire. But the big banks, we have them all coming up. So we're going to get on that. Look at the financials real quick, and lately I've been covering the same ideas, a lot of the same trade ideas: gold, silver, GDX, select commodities. I'm not going to cover each and every one because there's not many new developments since the last update, but I do want to do an update on lumber. So that's what we're going to look at here: the broad markets, financials, lumber, maybe one more update on AMC, or I'm sorry, AMC, for those of you in that one. Start out here with the 60-minute chart of SPY. I'm going to zoom forward, and again, simple stuff. You know, you get these divergent highs every so often. They're fairly regular intervals too. If you look at it this way, you can't bank on the timing of it, but you can see every so often. That's how even during an uptrend you get these pullbacks, and they usually will come after negative divergence. All the divergences are marked there, and so that's it. So right now we're rolling off. We had broke down and back tested this primary 60-minute uptrend line. That's what it looks like on SPY. QQQ, we need to break this primary uptrend line on the 60-minute chart. Remember, we just hit that recently. Right here was the last tag, multiple tags, so we're waiting for that. Today's marginal new high is still just an extension of the divergence. Just like here, you had divergence building, and then the correction sets in. 8% drop. Previous divergent high was a 12% drop, and so forth and so on. Now, let's look at my low volume indicators. Let's go back to SPY. Actually, you know what? Sometimes I leave out the small caps. There's a 60-minute chart of IWM right here. Really don't have a lot marked up on there, but most recently we pretty much plateaued here with that divergent high. You can see in overbought conditions we had about equal highs on the indicator, and equal highs on prices as well right there. Slightly lower high. I'm going to get to the 60-minute chart of the futures. Let's do that, and then we'll loop over to the low volume indicator. So we're on small caps. Let's just look at RTY. Something happened there. Let's clean that up. There it is. So there's that. I don't know what's going on here, guys. It just snaps back to this. There's a funky candle. A minute ago you could see it. Let me try something. Well, there it is. Okay, let's see. I don't know why it's not holding. That's weird. It usually will snap back. Let me try to change it down. Let's see if we can go to a 2 months instead of 3 months. Still there. Let's try 30-minute candles. 2 months, 1 month, 30-minute candles. Let's see what that gives us. Yeah, well, not going to work. Okay, we'll scrap that. That's new to me. All right, there's NQ, Nasdaq 100 futures, our primary uptrend line, like I just showed you on QQQ. Negative divergence continues to build. Sell signal to come on a break below that trend line. Again, same thing I've been highlighting for the last for a little while now. And then ES, same thing as SPY. You put in this divergent high right here. You broke and back tested this trend line, and negative divergence in place. Now let's take a look at the low volume indicator. Okay, so now what we're looking at, this is a daily chart of SPY, except I'm using a line chart instead of candles, because we're really just looking for the, in this case, it's a low volume indicator. I don't have an indicator that for volume that triggers buy signals. It's usually the low volumes that warn of corrections. So what you can see down below, I believe you can make it out, I have a red line and a yellow line. And sometimes it's the top one, the red line, that does the trick. Sometimes it's the yellow one. So call that a low volume zone, if you will. So I have them marked here. And so what tends to happen is when the market's volume drops off during a climb, you can see when we're rallying, and consider it is a form of negative divergence. You have volume diverging from prices. Prices are going up, and volume's going down. And by the way, I use a 10-period exponential moving average. That's the blue line overlaid on volume. And so when you see the market rising on diminishing volume, it just simply means that the buyers are drying up, at least for the time being. These are corrections. This is swing trading. Catch the rips and the dips. And so I have these horizontal lines here. It's usually once the volume starts to peak. So you can't use these as an exact timing indicator, but sometimes it's one and done, like right here, and then you get the correction. That was a little bit, we were there for a couple, maybe a week or so, and right here, there's the line, there's your correction. This one was a persistent period of low volume right here, all this period. So again, it's not an exact timing indicator, and just like divergences and overbought conditions are not buy and sell signals, they're merely indications of what's going on under the hood, and they give us a good heads up. So the more things you can align, whether it's a bullish case or bearish case, divergences, overbought conditions, oversold conditions, and low volume, the greater the chance that the charts are going to play out the way that they're indicating here. So that's it. There was you can see an extended period, and usually the longer it is of persistently low volume, the bigger the drop. That was that big 36% drop when COVID hit. But again, it was market conditions were already warning of a correction. There were divergences in the low volume signals. And then we had it here. And these are all the biggest drops that we've had over the last few years. And again, almost all, well, actually in this case, all of them were identified. And you can see right here, persistent low volume, and then boom. It wasn't a big one, but there was a drop there, and now we're back at it. So, the corrections range from minor to decent, close 10%, or even much bigger. So that's what I wanted to point out, that we do have that recently, these low volume conditions being hit. You can see there in the range. QQQ, not so much, but close. So QQQ, it's been pretty accurate. And in this one, I did the red arrows or yellow arrows. In other words, red's the first line. You can see them all here. And there was a red arrow, meaning we touched the red line, drop, red arrow, drop, yellow arrow, drop, red arrow, small drop, red arrow, big drop. Then we had persistent over low volume there. And that was, again, that was the biggest drop right there. Or right next to this one, since that over a year and a half ago now. And we're close. We're not there yet, but we do have it on SPY, so just wanted to point that out. IWM, it also works well there. There I have a single line. We're not there yet, but you can see right here we hit it, right there. And you can see that major top there, followed by this drop. We tagged it there, so you can see there were little corrections along the way, and then the big drop there, we hit it right here, followed by this correction. We're not there yet, so something to watch. And this kind of meshes with kind of the window right now. We have the most important earnings are coming up in the next few weeks here, or next couple weeks. We're going to have all the big FANG stocks at the tail end of the month. So a couple weeks from now, and I suspect the market will probably go into that holding pattern. So we'll probably see volumes continue to taper off and may get these low volume sell signals hit on QQQ and IWM as well, as people start to step back. Who wants to take a big position in front of earnings? So that's usually what you see, is volumes will taper off. And so that all meshes with, unless we get anything sooner, the correction may set in around the time those FANGs report. And I've gone over in recent videos, showed you a history of stocks like Apple and quite a few of these FANGs that have a history of rallying up into earnings and then selling off even when they blow the cover off the ball. That's almost Apple's MO, is to come out with record earnings, blowout quarter, beat expectations, yet they still sell the stock off, and that's where some of the biggest corrections for many years now has come from. So, all right, food for thought. Now let's talk financials, since we're talking about earnings. Again, big tech is a couple weeks away before they begin for the most part. But you have XLF today. This is the financial sector ETF. We had a sell signal back here when the primary trend line broke. We hit my first target there, bounce, hit it again. That's support, about 35, 33 or so. That's T1. That needs to go. We've been moving sideways since. JP Morgan, the king of the 800-pound gorilla in the room, they reported today, so we're going to look at those real quick. JP Morgan down about 2%. Nothing huge, but again, this was our trend line break right here. broke this. This was good support right here, 157. It was a major resistance right here, and then JP Morgan broke out, back tested, but then the breakout failed. And we went down, hit that 146.48 support level, bounced back to 157, hit it again, and so far we're rejected. So this is a big level. Near term, at the very least, near term bullish if JP Morgan can take that out with conviction. Otherwise, if it gets rejected, we already hit 146.50-ish once, and if we break it, we'll probably continue down to the next targets. Ultimately, I do think we come back down here to this longer term uptrend line right here in JP Morgan. So there's your long term target. If you want to trade the financials, I have price support as well that comes in about 1942 right there. These lines come in roughly together depending if and when we get there. And so remember, as the largest component in the financial sector and a big top, a heavy component in the S&P 500 as well, it's going to have a big impact on the market. And that would be about a 23% drop if that's hit. Berkshire is the only one. I'm going through these in order of market cap. Berkshire is second largest, and they report on August 2nd. So it's going to be a little while there. The rest of the banks all report this week. We have Wells Fargo reporting tomorrow morning. So there's what you want to watch. There's your next target, 37.93, give or take. We have Morgan Stanley reporting on Thursday of this week, day after tomorrow. Most of these guys report in the morning. Tech usually reports, big tech reports after the close. Big banks usually report before the market opens. So that's Morgan Stanley. Needs to take out that purple trend line. Citibank, we have some divergence here. It's worth noting on the RSI, positive divergence. Maybe that one goes that way. We don't have the same divergence. Almost close enough. I'm going to put it down there. So this one we'll watch and see. Here's the bottom line. It's earnings week. It's a gamble or a crapshoot to take a position, but we'll know once, pretty much by the end of the week, by Thursday actually, we'll know, because we'll have Citibank also reports this one tomorrow morning, and then finally next up is BlackRock. And BlackRock you can see sitting right here on right above the primary uptrend line. Divergence is building, so we get a breakdown of that trend line. That'll be a sell signal, and you can see these support levels or targets about 823.21, 7. We'll call that 740, and that 740 is a big swing target for me. I think we'll get down there eventually, especially if these earnings. Well, it doesn't matter how the earnings reports go. Again, to me. Like I said, I've seen, and it's quite often I've seen companies have a horrible quarter, and then the stock turn around and rally from there, especially if it's already been priced in, if that stock has been in a downtrend. And I've seen stocks blow the cover off the ball. Again, I mentioned Apple being, notorious for that, because it's all priced into it. Even if it beats the, the Wall Street expectations, you usually see that buy the rumor, sell the news thing. So we'll be watching these guys, and I will certainly continue to do updates. So that's the financial sector, and if it starts to roll over, as the charts indicate to me that sooner or later it's coming, that's going to have an impact on the broad market, and undoubtedly. All right, what else did I want to cover for you? Let's talk on lumber real quick. Lumber has taken another leg down. I'm going to show you the chart here. Let's see what chart I have for you. 1 second. Okay, this is lumber futures on the 30-minute candles I've been showing lately, and I remember most recently we had a divergent low right there. We broke out, hit the first price target, had a reaction so far, and as I said, any new low will still be, and is at this point in time, any marginal new low, which we've now made slightly below this low, still has bullish divergence here on this 30-minute chart and the 60-minute time frame. And then when we look at the daily chart, I'm going to zoom in here, scroll in real tight. Lumber has support. It's more of a support zone. There was a couple big gaps right here, and let me try to color this tool up a little different so you can see it better. We had a big old gap there that was backfilled, and we had a nice bounce. We bounced up to the top right here. We have resistance at this level. So we got that bounce, and I mentioned this is a big level, even bigger than that one, that 650-ish level right here, because we have this reaction low. And let me zoom out a little back in. We have this major reaction high right here, back from 2018. So you have this reaction high, you come across here, and it aligns with this major reaction low. You had some reactions there, a couple gaps there, and that's about where we're coming up on today. This is an end of day chart. So it's showing you right now we're about a 60% drop, 63 off the highs, and I'm measuring out to where we're at. It's not showing today's move on this chart yet, but it will. We're down here just above that 650-ish level right there. And again, that's in line. This was one of the biggest rally in years, and so therefore this correction is a little bit more than some of these previous ones that ranged about, well, there's a 60%er right there, 43%. And so we're still in that target range, and I still think lumber is extremely oversold. The other thing I noticed recently on lumber is it tends to have this pattern, and now that pattern has been repeated, of these, you get the PPO turning up right here like it's going to make a bullish cross, and then it gets rejected. So I think you can make that out. Let me zoom in a little tighter for you and move down here. These charts are a little clunkier, harder to work around. Here we go. So what I'm referring to is on these big corrections that we've had, you get this rejection. The PPO line is poised to make a bullish crossover, and you get rejected, and then you go on to make a new low right there just afterwards, and then that is the bottom right there. See, PPO was turning up early on in that correction, looked like it was going to make or late in the correction. It got rejected, went down just a couple, shortly afterwards, days or just a matter of a week or so, made another low, and then you got the bullish crossover, and then the trend, the big move up. And so that's what's happened here so far. It's a rejection right there, and it'll show today when the end of day chart prints. We're going to be down here, and it looks very similar to these patterns here on the PPO. So you got that little rally. We hit the first target on the 60-minute chart, and looking at probably a marginal new low, and then we'll probably see a lasting tradable trend reversal and a move up to the T2 and T3 for those of you guys that are giving it room or took profits at T1, cycling back in, or just watching lumber. Because the only other alternatives are to trade those ETFs that track timber and forestry companies. So you either trade lumber futures. Like I said, the best of my knowledge, there's not an ETN that tracks lumber futures. So you'll have to either trade the futures directly or those stocks. So that's lumber, and a quick update on AMC. We're starting to get that more downside. We're not in that waterfall type selling yet, and I think that'll come. I'll show you why. Well, first of all, we took out that 41.72 level, but we need to take out this previous reaction low. It's down 7.5% today, which is par for the course on this one. That on this 60-minute chart, the next target's about 33.13. On the 15-minute chart, you can see I have these volume at price histogram bars. I'm going to turn them up here, and you can see them a little clearer. There we go. And so what we're looking at here is this shows us where most of the buyers jumped in. You can see tremendous amount of buying up here. That means that volume price shows you this price level, how much volume occurred. So a lot of people were buying in. The bars are overlapping the trades right here. There's a bunch of trades at this point as well. And then you can see it starts to thin out. We have a bar right there, which we're now below, gets even thinner down here, and then almost hardly any volume right there. These gaps in the volume of price histogram bars often work like gaps on a stock, meaning because there's not a lot of support there. There weren't many trades that took place, so you tend to fall quickly and backfill that level. So if you're trading off this 15-minute chart or the 60-minute chart using these bars, again, you're about 32.20, 32.22 there, or what did I have it here? I had it at 33.13, give or take. And so plenty more downside, and then ultimately big old here, let me turn these up. This is a 60-minute chart, and you can see these bars here. You can see how it starts to get the thin zone gets larger and larger, smaller and smaller, if you want to look at it that way right here. So that's support. We'll probably get a reaction there. That is the next target, call it $33, but ultimately I think we'll work our way back down here to about that 14.58. And so that's it, guys. We have low volume signal on SPY in play. It's not a hard buy signal. It's more of a condition. Divergences continue to build. Select commodities look good. Wheat and corn, they're holding up. We're getting a bounce here, but like I said, the equity market's getting real frothy, and I'm still liking gold and silver near term. And other than that, keeping it light because of earnings season. We'll get the financials, or at least the bulk of them, out of the way this week. And then the market's going to turn its focus to the big market leading FANG stocks. Remember, tech has a much higher weighting. Apple, Amazon, Facebook, Microsoft, they're going to have the biggest impact on the market, and they're coming up in a couple weeks here. So we'll wrap it up here, and I'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.